good evening and welcome to the India Development Debate. All right, we have a lot lined up for you on the show this evening. Let me quickly take you through what you're going to watch on the India Development Debate before I jump into the lead story. So first up, we're tackling this whole controversy over auto taxes. There's been a very strong hit back from the Finance Ministry, with sources telling ET now that they think there's a lot of carping over nothing. We're going to discuss that issue. I also have a fantastic interview really with top economist Ratin Roy lined up, where he talks about where he thinks the Indian economy is heading. You don't want to miss that one. Up ahead, you will also hear from Puneet Chatwal of Indian Hotels on where he sees the trends for the hospitality sector. So great lineup for you this evening, but let's jump right in. So the controversy seems to have started with a Newswire report that quoted a top official of Toyota India saying essentially that high taxes and an oppressive sort of GST tax regime plus the cesses have caused the company to put on hold their expansion plans. Very soon, Toyota India came up with a clarification. We spoke with Vikram Kirloskar just a couple of days ago on this show. The Toyota International MD has put out a statement as well. But the controversy has not really died down, because now you have the Finance Ministry hitting back. Sources from the Finance Ministry have told ET now a couple of things in response. Number one being that GST rates are not higher in India than anywhere else in the world. The current GST rate plus the cesses in most cases are lower than what the previous regime was, including VAT, etc., etc. And thirdly, that look at the great royalties these companies are giving, back to their parent companies in their home countries. Why don't they cut those royalties instead of asking for SOPs on GST? So that's essentially, in a nutshell, the entire sort of counter argument. Does this counter argument really stand and hold? So we have for you auto experts on the panel and taxation and GST experts as well to give you every side of the story. I first want to talk to auto veteran Arun Malhotra, who's on the show this evening. Hormaz Sarabji joins us, who knows the in and out of the auto sector. And I'm also welcoming Pratik Jain, who understands GST like the back of his hand. So welcome to all of you, gentlemen. Let me begin, Hormaz, by getting your take on this entire fight. And I'll just tell our viewers that we're going to play out for you what Vikram Kirloskar said to us in an interview just a couple of days. They backed off. They said, no, we don't have any issue. But clearly, people in government have taken this to heart, and hence this entire clarification, which says it's not that bad.
To be honest, I think the whole issue of this cry for lowering taxes, yes, of course, taxes are high. But that's really how it's been, and that's how it's going to be. Because I think clearly in the current climate, I think the auto sector is going to be last in queue to get any SOP. So frankly, personally, I just don't see any kind of reduction in taxes being given at all. Frankly, I don't think that's the issue, actually. I think there are much broader issues. I think what has happened right now is what used to be a dream market, the Indian auto industry, the Indian auto market has turned out to be a complete minefield, which has made it, a very unattractive place to invest, a very unprofitable market to invest in. And if you look at it, it is one of the most, it's very, very difficult to make profits in this market. And it's not a coincidence that the top three most profitable car companies, whether it's GM, Toyota, and Volkswagen, they clearly aren't going to be, they aren't betting that big on India. Of course, Volkswagen has got something, but again, that's why Skoda. Volkswagen itself completely pulled out and said, hey, we can't crack this market. Give it to Skoda. You just do it for us. GM has completely pulled out, and they're all the better for it. Toyota, clearly, I think which is really at the heart of this controversy. Look, they aren't going to invest in new capacity. Their strategy is very clear that now they've tied up with Maruti. So they're going to get Maruti to do all the investment. So why should they invest? They're going to be a bit on slow burn. They're going to be focusing on their bread and butter models like the Innova and the Fortuner.
Who is investing in new capacity? No, just a quick counter. Sorry, just a quick counter, and then please do complete your point. Who is investing right now in this market in newer capacities? They first have to fulfill their existing capacities.
No, but I think having said that, you've got certain players like Suzuki, which is, this is the market for them. I mean, this is make or break, this is life and death. So they have to invest over here. You've got the Koreans, which have a huge stake in India. So I think what's going to happen, the strong are going to get stronger with more investment, and the weak actually are going to get weaker, because it just doesn't make sense for them to look at India as a market. And that's really a shame, because, the playing field is not even, it's ridden, it's like a minefield, as I say. You've got these regulations just popping up, which really add to a lot of cost. We've seen what's happened with BS6. It was accelerated. Now they're not even going to let the investment of that pan out. You're talking about EVs. There's just no thought given to the fact that this is a long lead industry. It needs absolutely stability of policy. You've got people saying invest in this technology, don't invest in that technology. It's just scaring people away, because you can't. If anyone understood the way the auto industry works, it's very long lead. It's not like a phone. You can bring a car out every year. It takes a long time. A product model development takes at least a good 4 to 5 years. So you have to forecast what's going to be there after 5 years. And if you start changing regulations in the middle, obviously you're going to scare off a lot of investors. So I don't think it's a tax issue, actually. I just think, frankly, I don't think the government gets it, that this industry has certain nuances, has a certain need for scale. And again, scale is what gives you cost competitiveness. And we just don't have the scale, because it's an unprofitable market. No one wants to come here. The volumes are shrinking. So it's a bit of a mess, if you ask me.
Okay, let's take a look at what this sort of note says on new players, because these finance ministry sources go on to say that new players like Jeep, MG Motors, Kia and others are making inroads. Incumbents like Maruti and Hyundai are doing well. They also talk about pricing and the discerning Indian customer. But like Horma said, all of this started with Toyota. And that one news report which quoted one top Toyota boss coming and saying that, it's almost as if we make alcohol or drugs. That's how high we've been taxed. I spoke to Vikram Kirloskar, vice chairman of Toyota Kirloskar Motors, just a couple of days ago, and he wanted to clear the air. I'm going to play out a small excerpt of that interview before we move ahead.
Industry has been talking generally about the high taxes in the auto sector. I think at every meeting we've had, even from when the COVID crisis has started to earlier, we have talked about high GST taxes. It's not only for foreign companies per se. It is for all. I think it's for all companies. It's a common issue. But I understand the tax situation in India as well. We have to collect taxes from somewhere. We have to meet the budget somewhere. So it's a little bit of a yes, the taxes are high compared to a lot of other places, but I don't think that's I don't think I'm getting a message saying go back or something like that.
You mentioned very briefly in your response that you are not expanding further. Is that an impact of the current economic scenario, or?
We are not expanding capacity further. But let me tell you, this year we are going to be investing between 2,000 to 3,000 crores in new technology and new upgrades. And we are investing into electrification, which we will sell not only in India, but export around the world.
I wanted to come back to you on a specific point on taxes in just a bit of detail, because as you said, this is a demand not just from one or two players, but from the industry overall. There was some mention of it by the finance minister that maybe there is merit to the argument that at least smaller passenger vehicles and two-wheelers, etc., do not deserve to be taxed at the highest level possible. Is there any hope that you have for a reduction in taxes, and do you think that we can see a real recovery in the auto sector without some of these taxes being paid? I want to just quote from that article which has made all the headlines, where Mr. Vishwanathan is quoted as saying, "You'd think the auto sector is making drugs or liquor." I mean, what do you say to that? Is that the kind of sentiment out there in the auto industry, that we are being penalized unnecessarily?
No, I don't think that's a fair statement. I think in the current situation, if I was government, I cannot reduce taxes. We already are running short. Government is not able to pay GST back to the states. There's a shortage of tax collection. I don't think it's possible, really, frankly, in all seriousness, to expect anything of a tax increase. But what we hope is in the long term, taxes will get stabilized or will get rationalized across everything. That's the thing. Right now, it's almost impossible, I think.
Okay, that was Mr. Kirloskar sort of trying to damage control after that story first came out, but now there is a hit back. Mr. Malhotra, as an auto sector veteran, how do you look at it? Do you, agree with what Hormaz is saying, that this is beyond a tax issue? Or is it, like finance ministry sources say, discerning what the Indian market is about? The argument is that smaller vehicle makers are doing well. You have to understand what the pricing is about and then really come out with products that the Indian market wants.
Tamanna, if you look at the factual point when we talk of taxes, the fact is clearly that the taxes in India are the highest you compare to any country. And generally, when you look at taxes, we need to combine the road taxes in the states which they live in. So effectively, on a two-wheeler, entry-level two-wheeler, the tax is 38%. And in cars, it goes up from 30% to 50% if you combine the road tax. So they are the highest. There's no two opinion on that. Government, as late as last week, prominent ministers have been saying that two-wheelers are looking very seriously to reduce GST. So they themselves have realized, and this talk is going on for the last 2 years. And on top of it, we have states in the last 2 years who have been raising road taxes because they also want a part of their average road tax used to be 6%, now it's 10%. So the problem is severe. And regarding this talk of royalty, if you take two-wheeler manufacturers, whether you take Hero, whether you take TVS, whether Bajaj, they're all domestic companies. There's no royalty. And if you want to cap the royalty, the government can do it. So there is clearly a challenge. And the challenge is much beyond the taxation. But government has not been consistent. They've been talking of a scrappage policy for the last 3 years. Every time we hear it is round the corner, the corner has just not come. So, and what Hormaz clearly mentioned is that you need a more consistent, more stable, more long-term policy. If you look at the policies in terms of what was on Euro 6, now the CAFE norm, sometimes on EV, sometimes back on hybrid. So then industry is also confused. So you need more consistency. Probably two-wheelers, which is the mass market, or smaller cars, you need to rationalize taxes also. And it will give a fillip to the market. And let's not forget, last but not the least, even in the operating cost of the petrol and diesel, 2/3 of the cost is taxes. So taxes are absolutely on a very, very high level across the board.
Are they higher than other countries? The government seems to be arguing that that is not necessarily the case. Let me get the tax guy, Pratik Jain, in on that, who has actually helped us do a bit of a comparison, and we're playing out those figures for you as well. Pratik, let's just look at the numbers. How do you break it down?
Yeah.
Yes, Pratik.
Oh, yeah, okay, asking me. So see, there are 2-3 points which I want to highlight. One is the level of taxation in India on auto sector higher than most of the other countries? The answer is yes, it is higher, right? That's the first point. The second point is it higher than the pre-GST level in a sense that is GST a problem? No, that's not a problem, right? Because the government has kept it at a revenue neutral rate, meaning thereby that whatever was the effective rate of taxation before GST came in, which is July 1, 2017, the government has more or less opted for the same rate. In fact, in 1 or 2 cases, perhaps the rate of tax has slightly gone down. So that's the other point. If you look at the taxation philosophy, right, for vehicles, there are 2 things which come into play. One is the environmental side of it, because you have petrol vehicles at a lower tax rate, you have bikes at a lower tax rate, you have electric vehicles at a lower tax rate, and so on and so forth. The second is, and you can always debate that the bigger vehicles, SUVs and the bigger cars, are treated as quote-unquote luxury items on which there is a cess of 12% to 17% or up to 22% which applies, right? So that's a taxation philosophy. Now, So therefore, is it high? Of course it is high. But the point is that if the auto sector is asking for a reduction in tax rate, why not hospitality? Why not real estate? Why not other sectors, right? So, I mean, this pandemic is a problem for many sectors, right? So therefore, if the government takes a call to reduce the taxes on auto sector, you'll have to take a calculated risk, because you'll have to see that whatever taxes I reduce, the consumption of the vehicle should go up, because the level of taxation that you want to collect should be same, right? Otherwise, where will the money come from? So the philosophy of indirect taxes, you reduce the taxes.
No,
and,
Prateek, if I may, I think we're missing the point. If I may, Prateek, if you would allow me, I think we're missing the point, because I think the conversation has gone far beyond please cut GST. From the kind of response we've seen, clearly the thinking in government is that there is no requirement to cut GST. Instead of asking for a tax rate, why don't you transfer less royalty to your parent company?
Yeah,
The point is, are high taxes prohibitive to expansion plans?
No, I'll put it this way. These high taxes have been there for auto sector for a number of years. Okay, it doesn't mean that the sector has not expanded, right? There are players who have done well over the years, right? Of course, last 1 or 2 years, sector is facing a challenge, no doubt about that. But I don't think it's right to say that high taxes have prohibited the growth of the sector in the country. Now, therefore, my take on this is, if the government wants to reduce the tax rate, the only perhaps option for them is to look at bikes and smaller vehicles, right? To reduce the taxes. They can perhaps look at it temporarily, 3 months, 6 months kind of a thing, to reduce taxes and then gradually increase it. I don't think from a long-term perspective, the Indian fiscal situation is such that you can look at drastic cut in the tax rate. I don't think that's going to be possible. You can give it 3 to 6 months, see whether the demand is picks up or not. The question, Tamanna, is that suppose you are charged 15,000 rupees, 20,000 rupees less for a car. Will it prompt you to go out and buy the car at this point in time? Because clearly people are in that mode of conserving cash. So I'm not sure whether this will work or not. But if the government wants to try it out, perhaps a short-term reduction is one option that they can look at.
I just want to delve a little more deeply into the comparative tax table we've put out there, and what Mr. Malhotra and what Prateek has been saying, that our taxes are higher. So now let's look at the counter argument which is coming in, which compares it to Japan, ironically, of course, the home base of Toyota, which currently has 3 types of taxes on automobiles. Once on purchase, an annual automobile tax based on engine size, and finally a weight tax. It compares it to EU, where the base rate for VAT or GST is 20 to 25%, and then additional taxes according to jurisdiction. It compares it to UK, where again there are up to 14 rate slabs depending on how expensive the vehicle is. Then they add parking charges, other sort of taxes, road usage taxes, etc., to make the argument that this is equally bad. It's not like we're unusually high, taxing very highly. I want to get Hormaz in on the taxation angle. When you speak to majors in the auto sector, Hormaz, is tax really on top of their mind?
Well, look, it's the overall cost structure, and frankly, I think this whole tax thing to me is, again, as I said, not the issue. Yes, our taxes are high in India, but there are countries where they are higher. You go to Singapore, highly unfriendly country over there, where taxes are absolutely prohibitive. Certain Scandinavian countries. So we aren't the worst. Yes, we are high, but I think, as Prateek said, even our taxation philosophy is quite logical, and I think the reduction should come from the two-wheeler onwards, and that makes a lot of sense. And as you go up, obviously it gets more expensive. I think the complaint really comes from the companies which we've not talked about. I think the key issue is localization. That really is what makes you competitive or not competitive. But for localization, you need high volumes, and that's where the catch-22 situation is. So the structure of the market now in India, because of the way, let's say imports and are taxed, and even CKD kits are taxed vis-a-vis local production, is that you've got this massive barrier, like a fortress actually, which is right now held by Maruti to a large extent, and then by Hyundai and the local manufacturers Tata and Mahindra, and no one else can enter because no one's willing to take that plunge because the volumes are just not there. So this is really the situation. I think the deeper problem is, how do you increase volumes? How do you increase demand? I think that goes beyond tax, and I think that fundamentally now is a big worry, because car volume growth is directly linked to GDP growth, and we know what's happened to our GDP. And that is, I think, the biggest problem.
Absolutely.
And the biggest pain point for the car industry and for car demand.
Well, the latest sales figures have shown, some kind of hope. We have to see if this is pent-up demand, move towards personal mobilization, or, will be sustained. So we'll not speculate on that right now. But Mr. Malhotra, is this a lived experience that apart from the 3-4 players that Hormaz has talked about, it's very tough for anyone to enter in where the volumes don't exist? And also give us your take on this argument about royalties to the parent company. Hefty royalties going to the parent company, why can't those be reduced?
So clearly what Hormaz said, as far as the passenger vehicle industry is concerned, beyond the top 2-3 companies, the other company volume, they cannot make any money. So clearly, not coming on royalty, let's not only focus clearly on the 4-wheeler, take the 2-wheeler, where I think most all the companies are making profit and virtually there's no royalty. So it's a sort of a mixed sort of situation. But I think if government is so concerned with royalty, nothing stops them to put a constraint or put a cap on royalty. Already I think there's a talk and there's been a reduction in royalty, but I don't think we are mixing up two issues. Royalty is not across the board. It's in one or two companies. If action needs to be taken, let's take it. But if we are talking of the entry-level 2-wheelers, which has nothing to do with the loyalty, where the GST of 28% combined with the road tax of 10% is making 38%. It's like a sin plus tax because 28 is highest. That's where the question is. But clearly, economies of scale are a challenge. And then we have other destinations coming in for production, whether it's Vietnam, Thailand was already there, Eastern Europe is there. So that's a challenge area. So probably companies in terms of increasing capacities, and even you look at 1 or 2 players who are big Japanese players in the Indian market, they don't use India as export base. They prefer to use Thailand. So that's a question, and that's a point for introspection also. Why these large companies who have large export volumes don't use India?
And I just, if I can just add 1 second, is that I'm not sure whether royalty argument is a right argument, because see, royalty between 2 business entities are paid as per business requirement, right? There are transfer pricing regulations that apply for the income tax authority to see whether that royalty is excessive or not. I mean, you can't say that a business should not pay a particular charge, right? I mean, tomorrow you might say that why are you paying so much of salary, for example, to the executive?
Exactly.
I don't think that's a right argument. On taxation, I mean, I understand the government point of view that reducing might be difficult, but I'm not sure whether royalty is the right argument.
No, and I'd like to add on royalty also, don't forget,
So, Prateek, just last... Yeah. No, go ahead, Hormaz, go ahead.
No, I was just saying on the royalty bit, again, don't forget what's the royalty going towards. It's going towards fundamentally what is product development, which is so expensive today globally for the auto industry, which has resources absolutely stretched because you have to invest simultaneously in multiple technologies. That's why you've got all these collaborations, whether it's electric, whether it's autonomous, whether it's a current IC engine. So I think, the royalty argument doesn't make sense because, what in a way sense it's doing, it's funding fresh product development, which finally comes back into the market as well.
Absolutely. Well, the big question is that do you think there is any mood towards even considering a tax cut after this kind of a response? And in the current scenario, Well, I'm going to take the liberty of answering on everyone's behalf that looks unlikely at this point. Even the statement about two-wheelers was hedged by saying the council has to decide. The council first has to decide how to make good the compensation cess that they are lacking and are finding the funds for. So it could be a pipe dream right now. But thank you so much to all of you for joining us.
I just want to add one thing.
What this issue is truly about beyond the headlines.
I just want to add one thing. The worry is they shouldn't raise the taxes after all this.
Yeah.
I won't be surprised by that.
Yeah. No, let's hope not. Let's hope not. And I think a lot of state finance ministers I speak to off the record say that let's not mount that right now. Demand is already bad. But we'll have to end it there, gentlemen. I'll take a very short break, but we're talking about the economy next. I have a very interesting speaker with me who pulls no punches. Ratin Roy will join us on the other side and talk about where he thinks the economy is headed. Don't miss that interview.